Hey, good morning, everybody. Today is Thursday, May 5th, 2016, Cinco de Mayo. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Let's get started today by taking a quick look at our Spectrum Analyzer. It's important that we identify where the leadership in the market is, and to this end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, fully 40% of them came from the real estate investment trust industry. Restaurants had 6 stocks in the top 100, application software 6 stocks, integrated utilities 5 stocks, and rounding out the top 4, utility networks, packaged foods, and beverages, all with 4 stocks each, in the top 100 most powerful stocks in the most powerful industry groups. Obviously, we're seeing a lot of real estate investment trust recently. We've been seeing quite a bit of restaurants and quite a bit of application software. These may be good places to look for leadership in this market. Let's start today by taking a quick look at our Russell 2000. Okay, as you know, I've been saying recently that the Russell 2000 is the key to the market going forward here, and blah blah blah. The Russell is in a very short-term downtrend here, indicating that this market's fairly weak. Notice how the Russell right now is 1% below its downward sloping 21-day exponential moving average. The 10-day simple moving average is also sloping downward. We don't follow the Russell 2000, but if we did in our market timing model, the Russell 2000 would be right on the verge of going to a sell signal. That's worth noting when we consider that the Russell is the key to the market going forward. Right now, the Russell's bracketed by resistance down here in the 1040 area and support down here in the 1079 range. The Russell looks weak, and as a result, I think the rest of the market's going to be a little bit weak here. Let's see what the NASDAQ Composite's up to. But before we do that, stocks continued to sell off with enthusiasm yesterday. Both the S&P 500 and the NASDAQ added distribution days to their count. A distribution day is any trading session where the S&P 500 or the NASDAQ closes at least 0.2% lower on heavier trading volume than the prior day. Distribution is a sign of institutional or professional selling in the market, and too many distribution days over a short period of time, typically a month, can indicate that an uptrend is in trouble. Current distribution levels are a serious concern, with 10 days in the past month on the NASDAQ and 9 on the S&P 500. I don't believe I've ever seen that high a distribution count in an uptrend. According to Investors.com, the current market outlook remains an uptrend under pressure. Meanwhile, our market timing model is barely clinging to a buy signal for the S&P 500, while the NASDAQ is on a sell signal. The buy signal on the S&P indicates that conservative traders can buy, but we shouldn't be increasing margin at this point. A sell signal on the NASDAQ indicates that aggressive traders should be off margin and can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. Declining issues outpaced advancers by better than 3-2 yesterday. The New York Stock Exchange advanced decline line continues to look healthy. New highs bettered new lows. According to our Ramosi ratio, small capitalization stocks bettered large and continue to outperform on a 10-day moving average basis. Bulls prefer to see small caps outperform. The market appears to be struggling to define short-term direction recently. We're seeing signs of strain in the market. The outsized distribution numbers recently and the sell signal on the NASDAQ are cause for concern for the bulls. This is a good time to reduce or get rid of any remaining margin in your portfolio. Be careful and keep your stops at their tightest levels. Okay, yesterday the NASDAQ Composite was down 37.58 points or 0.79%. We closed just about the midpoint of the trading range yesterday, which is a little less bearish than we've seen recently. We closed at 47.25, and notice how we've undercut the 1% envelope that brackets our downward sloping 21-day exponential moving average. That's bearish, and according to our market timing model, the NASDAQ right now is on a sell signal. For you followers of William O'Neill, yesterday was another distribution day. We traded higher volume than the prior day. We are currently in an uptrend under pressure. We have been in an uptrend since February 18th, but we have a huge amount of distribution in the NASDAQ. We have 10 distribution days in the past month. We have this cluster of 6 distribution days over the past 2 weeks. This cluster of distribution is the reason that the market is in an uptrend under pressure. Note that tomorrow we will lose this distribution day due to age, but still that leaves us with 9 distribution days over the past month. That's a lot of distribution and an indication that this is a pretty weak market at this point. Right now the NASDAQ is bracketed by support down here in the 4506 area and resistance in the 4900 range. Before we get to that resistance, we have the 200-day moving average, which also will show us a little bit of resistance. Let's see what the S&P 500 is up to. S&P 500 yesterday was down 12.25 points, or just under 0.6%. We closed at 2151. We closed in the lower half of the daily trading range, which is bearish. We closed just above the 1% envelope that brackets our downward sloping 21-day exponential moving average. A break of that 1% envelope would send the S&P, or would change the market timing model call on the S&P 500 from a buy signal to a don't buy signal. Yesterday, trading volume on the S&P was higher than the prior day, giving us another distribution day. S&P is currently in an uptrend under pressure. We've been in an uptrend since February 18th. We have this cluster of distribution days. That's 9 distribution days in the past month. That's a lot of distribution. Note that tomorrow this distribution day will fall off due to age. However, that leaves us with 8 distribution days in the past month. It's a lot of distribution, indicating that the S&P 500 is weak. That noted, our market timing model still has the S&P 500 on a buy signal. We'll see if we can hold on to that buy signal. In order to do that, we would not want to see the S&P 500 fall any further today. Right now the S&P is bracketed by support in the 2244 area and resistance up here in the 2116 range. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson LaCours Incorporated believes to be accurate. Ohanneson LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.